Hi, this is Joe Neighbour, Head Analyst at Sequant Capital. Today is the 19th of December 2017, and today I'll be going through our top 10 picks for 2018. Now, this report was published about a week or so ago. It covers our top 10 picks from a technical and fundamental perspective. But what I'm going to be doing today is taking a bit of a deeper dive into the analysis, the technical analysis on these stocks, to give you a bit more of an insight as to why or how we came up with these suggestions and why we believe these stocks will be good picks for the year ahead. This is our first pick of 2018, and this is Bodycote. This is an industrial engineering company on the FTSE 250. And as we can see from the weekly chart that we have here on the screen, that the shares are in a very nice long-term uptrend. We can see there's clearly higher lows here all the way along. And what we've seen here is this big resistance level at £8.30, which goes back to 2014, which had really kept upside advances. We've seen this big pullback, this big corrective phase, which was kind of a rounding bottom, which then broke out through 6.30, and that was at the start of the year. And we've seen a pretty impressive move back up to this £8.30 level, which again has acted as resistance, as we can quite clearly see here. Now, the pullback was pretty shallow, really, and we saw a nice hammer candle here, and then this big move back to 8.30, and then an eventual break through it. And the move was pretty significant. It was quite sharp and happened quite fast, and we saw this top out around about £9.80 before then retreating back to retest what is now a new support level at £8.30. Now, last week we saw this hold almost to the tick. The low there is 8.34, so 4 or 5p off of that support level. And this week we've seen quite a decent bounce, and what potentially could form into a bullish engulfing, which would be another bullish candle and suggest that further upside is possible. Now, in terms of how we've come up with our target on this, we've got this big rounded pattern here in line with the uptrend. So if we measure this move from the lows here in 2015 to the highs or to the break point at 8.30, and we measure that higher, then we can see £11.76 gives us a rough indication of what we can expect on the upside. So that is what we're looking for over the medium term. In terms of percentages from where we're currently trading, if we take it from the high of where we are at the moment, then potentially over 30% worth of upside to that target, £11.76. So technically that is why we're looking at Bodycote. Looks really good on the weekly charts, and that's some pretty decent upside potential from here. Our second stock that we're taking a look at is a company called Just Group. Again, another 250 share. Only been trading on the main market since the end of 2013. From the IPO back there, we saw a high up to £2.86, but then a massive pullback down to we've got here £1.28. So a very sharp pullback, and then pretty much did nothing for some period of time. And throughout sort of 2016, 2017, we've seen this kind of bottoming phase going on. We saw a big low down to there 84p. That was in August 2016. And then we saw a big rally back up to 158, which has acted as quite a stiff resistance level. We then saw this pullback down here to around about 120, and what we've seen now form is an inverse head and shoulders. Now, this is a fairly potent reversal pattern. It's one that I always look out for on charts, and one that I trust quite a lot, as I've seen a lot of them work and do some fantastic work on the upside. We've got this left shoulder here, as you can see. We've got this head down here, and then we've got the right shoulder here, and then finally the break here above 160. We had a bit of a go here, but it was a false breakout that quickly came back down. But we've now seen a break again above this 158, and it's looking good to continue higher. We have made new highs just about there at around about 166. Now, it's trading at 165 today. In our opinion, looking good to keep going. Again, if we take this measured move from the low to the high of the neckline of the inverse head and shoulders, then we're looking for a move up to 232 from here, which on a percentage basis, if we take that from the current price, we're looking for over 40% on that, and that's the measured move from this inverse head and shoulders pattern, which is on a weekly chart. So potentially some really significant upside potential there, and a share that we feel looks pretty good value, and one that we'd be quite happy to tuck away and hold throughout 2018. The next share we're looking at is CARDO. This is the supermarket chain. Not had too good a track record of producing positive returns for investors. If we look at where the highs were, this was back in 2014. They reached £6.24. They sharply sold off down to lows of 216 in the same year. So 2014, not a very good year at all. Since then, the shares haven't really done too much. They've kind of bumbled side really between highs of 478 and again back down to those lows of around about £2. Now, the sideways movement that we've seen between 2016 and 2017 has been quite tight. The range here has only been between 217 to 326. We saw a potential breakout here, which actually failed pretty quickly, and saw the shares fall back down, as you can quite clearly see there. But more recently, we've seen some good news come out from the stock, and that's burst through this big resistance at 326. Now, so far it's holding above this level, so if we can see some consolidation above the 326 level, then we believe then we could see some further upside from here. And if we take the measurement of this range here and project it higher, then we could be looking for an upside move to around about £4.30 over the medium term. And if we take a look at the Fibonacci levels, going back to the highs that we saw in 2014 to the lows of 203 that were reached in 2016, then we have a 50% and a 61.8% retracement in and around this level, which is roughly the sort of midpoint of where we're projecting the upside gains to go. So that also works quite nicely and gives us a reasonable area to target. Now, if we're looking at percentage-wise of where we are currently, which is 352, and we look towards the top of that arrow, we're looking for about 21% upside over the medium term with the CARDO group, providing it can stay, of course, above this 326 level. If it does start to break below, then the idea will invalidate, and we would suggest closing the position. Our next trade that we're looking at is RBS. Now, RBS, as we all know, has a pretty checkered history, still obviously part owned by the government, and what we can see here from this weekly chart, and this goes back to the lows that we saw in July 2016. So this is around about the Brexit lows, and since then we've seen quite a steady sort of gyration between this bullish channel, if you like, on the weekly chart, with dips tending to attract buying interest. We saw a bit of resistance form around about the 268 level, and that actually gave way there, which is October this year. Now, the break above this 269, 270 level saw a sharp acceleration higher to just below £3. We've since seen a pullback to retest this support level at the 268, and so far we have held quite nicely. Now, clearly the trend over the sort of short to medium term is bullish. We're in this bullish channel. We've got no reason to believe that this bullish channel is going to fail anytime soon. And with conditions in the UK improving from a growth perspective, from inflation perspective, and of course interest rates now starting to rise, this should be a positive for UK banks. So they can potentially come out of this phase that they've been in, where they've been all over the place, really impossible to trade at times and been extremely volatile. Things seem to be stabilising a bit here. We can see this with this narrow bullish channel that we're trading in with the RBS. So we believe there is upside potential from here. And if we sort of look towards the top end of the channel and roughly the 61.8% retracement level of the highs here that we saw in 2015 of 414 down to the lows that we saw in 2016 in July at 148, and we take that from the current price. So the 61.8 offers around about 12.5% worth of upside potential. If we continue to trade in this channel over time and even go as far as reaching the 78.6% retracement, which would be a kind of top end target, then we'd be looking for around about 28.5% on RBS over the short to medium term. The next up we're looking at is Kingfisher Group. This is the retailer that owns B&Q and Argos. As you can see here, this is trading in quite a large range, and this goes back to 2014, the end of 2014, and we reached lows there of 283, and within the next year we've got to the highs of 385. So we've been ranging within here for some time. Now what I've noticed on the shorter term time frame on the daily chart, if I just flick to the daily chart quickly, is that the shares have been forming a little bit of a bottom pattern within this large range. So it's quite a shallow one. It's sort of narrow ranging between these levels here, and then finally we saw a big breakout here, which was in at the end of November. The shares burst above it. They pulled back to retest this new support around about 314, and ever since they've been pushing higher and higher. As it stands today, we're at what's we're at today, 339.7, and we're looking really for a move back to the top of that range at around about 385. So if we take that from where we are currently up to the top of the range, then we're potentially targeting returns of around about 13.5%. Flick back to the weekly chart. And if we do get to the top of this range, then there's obviously the potential that we could even break above it. We've attempted to break above this on 1, 2, 3, 4, 5 separate occasions previously. If it does get up to this level again and eventually does break and can build above this level, then there's no reason why we can't head back up to those highs that we saw at the end of 2013, which come in around about 447. And in terms of upside potential, then we'd be looking for over 30%. So another one that we'd quite like for 2018. Next, looking at WPP. Now, they've had an absolutely terrible year. If you look at the highs of where they were at the end of February, they reached highs of £19.28, and they've since collapsed down to lows of £12.38. So a pretty severe drop there. If we go from the highs to the lows, we're looking at a 35% drop, which is really quite awful in terms of performance. WPP, however, is still trading in a long-term uptrend. If we go back down to the lows here in 2008, you can see that we are trading in a fairly steady uptrend, and any previous dips to this trend line have attracted buying interest, as we can see down here previously. And obviously when we reached here at the end of November, we've seen a reasonable bounce back up to around about £14. Now, long term, we feel that this, clearly it is in a long-term uptrend, and we feel there is some value around here. We've got some horizontal support on offer as well, around about £12.70. So we do believe that a recovery could take shape. WPP, a massive name in the advertising industry, and we feel that they have got the potential to bounce back. So from a value perspective, we feel that this could be a decent one to tuck away for a recovery in 2018. Now, in terms of where we're looking for upside from here, if we go by the Fibonacci levels and looking for sort of retracements back higher, then we would be looking for initially a move to around about 50%, which is about 13% from here. And I think the sort of top end of expectations could be for a move back up to the 78.6%, which offers around about 27.5% upside from here. Now, this move or this idea would invalidate if it were to break below these lows, because at which point the trend has buckled, it's finished, and we've probably got a very large top pattern in place as well. So at which point we would not want to be in the shares any longer. And that point to keep an eye on the low side is 12.38. So anything around about 12.30, we're going to suggest closing the position and forgetting about that one, because really any hope of it going higher probably would have ended. Next, we are looking at EasyJet. Now, EasyJet has had a bit of a tumultuous year. It's been gyrating between these lows down to 11.90 up to these highs at 14.50, and there's been some pretty sharp moves in between as well. I mean, the long-term uptrend we still like. This is touched made a low there, made another low there, another low there, and it continues to move higher. But it did form this very big top pattern, as you can see, and it broke down here, and obviously when we saw these lows down here, but it's recovered pretty nicely. It's broken back above this what was resistance, and now acting as support level at around about 11.90, 11.88. And now we're trying to break through this resistance level here at about 14.50. I think if we can break through this level, then we've got a lot of clean air up here for the shares to move into, and ideally we'll be targeting a move back up to these highs at around about £19.20 to give us sort of more near-term targets on this, and looking at the Fibonacci retracement levels of what we can expect. I think 61.8% is not too far away, so we could see that pretty quickly. But certainly the 78.6% level would be another reasonable target on the midpoint to this ultimate target of 19.20. So even up to the 78.6, we're looking for around about 20% worth of upside on that one. Next, looking at ITV. Now, again, like WPP and other players in the media industry, this has not had a very good 2017. If we look at the highs of where it was at the start of the year, it was around about 207, but we've since come down to lows of 142. So quite a severe move to the downside. Again, we can argue that there is potentially some trend support on offer here. We've got these lows that we saw around about the Brexit lows in June last year. This is a low of 141, and this has held again on a retest in November, and it's held, and we've seen a pretty decent bounce. From a value perspective, it does look cheap, compared to where it's historically been. Obviously, we have been at these highs up here at 282. Technically, as long as this level here at 140-ish holds, then I think we could see a recovery play take shape throughout 2018. In terms of where our upside targets would be, looking from a retracement perspective, then I think up to the sort of 50% level, we could be looking for around about 27-28%. Anything as potentially as high up to here, which would be 251, which are around about 50% upside potential. So a bit riskier, because clearly, we are in a downtrend at the moment. But in terms of the upside rewards, providing this 140 level holds, then I think this could be a potential recovery play for 2018. Next, I'm looking at Johnson Matthey. Now, Johnson Matthey is the chemicals company on the FTSE 100. Again, had a pretty up and down year, really, all in all. Continually hitting its head on this level here, which is 35.60. Now, we've seen 4 previous attempts at trying to break this level. I couldn't really call this the 5th because it didn't get quite to that level there, as we can see. But what we can see potentially forming is a bit of a head and shoulders, an inverse head and shoulders pattern here on the weekly chart. And this coincides also with this uptrend that we can see here on the weekly charts. So I feel at least we're going to see another attempt at this level at 35.60. So upside potential from here to that level at 35.60 is still quite attractive in its own right. We're looking for potentially 16% move up to there. But if we can break above this, then obviously we've got all this fresh air up here, which is uncharted territory for the stock. And if we could see a big breakout above that level, then we could be looking for some spectacular upside potential here. So we go from the lows to that neckline there and target up to £49, which from current levels really does offer some significant upside. We're talking 60% from current levels. So from a risk reward perspective, it's one that we really quite like. We can see it's in an uptrend, and we can see that this inverse head and shoulders is potentially building on the weekly chart. But again, it does need to break through this 35.60 level in order to validate that level. In the shorter term, we can see this big move higher here, which was happened on news. We have seen a pullback within that level down to the 61.8% retracement level, and so far it's holding. So this could be a reasonable entry point, certainly to play it back up to that level there, at which point obviously evaluate the position that you're in, maybe look to protect some of it, take some profit off the table, but be aware that if it does get above this level and builds and can hold above this level, then there is this potential upside target of £49 on the stock over the medium to long term. And lastly, we are looking at Persimmon. I mean, the house builders have been fantastic throughout 2017, and even further back, they've just been in a very steady uptrend. Obviously, we saw this blip here, which was the Brexit here, which some very wild price action. But again, buyers were quick to step in and buy this up, and really the shares haven't looked back since. They're in a very steep uptrend. All dips towards this trend line continue to be bought. We've got potentially a bullish engulfing pattern forming on the weekly chart as it stands at the moment. But I mean, £30 seems an obvious target for the shares to reach in the short term. And beyond that, we see no reason for this sequence of trading ending. So we expect to see higher highs and higher lows forming on the weekly chart. So I think it's a reasonably safe bet here to buy Persimmon and tuck that away, and expecting more of the same throughout 2018. So that concludes our stock picks for 2018. Last year we made our predictions in 2017 at the beginning of the year, and throughout the year we published various reports on a monthly basis, stating our top 5 stocks to buy. We covered a range of categories with the FTSE 100, FTSE 250 and AIM companies, and collectively, had you bought all of those stocks on an equal weight basis, then we would have returned 23.4% collectively on our stock pick reports. And you can find our review of 2017 in the links below. So please do check that out to see what we did recommend last year and how it performed. And hopefully we will see similar returns again, or if not better, in 2018. So we'd like to wish you a Merry Christmas and a prosperous New Year, and thank you for listening.